Thanks so much for joining us here on a Friday. I'm Marlon Bowling with you to keep an eye on your ag commodity trade. A whole lot impacting our ag commodities here as we get into the weekend. For one thing, of course, we are wrapping up that Midwest crop tour that's been going on, put on by Farm Journal and Pro Farmer. That's they're going to, I believe, announce their final results by noon today or so. We did have some numbers that came out from the leg of the tour yesterday. I see on the newswire where we just had a couple overnight sales announced by USDA once again. A quick look at those. It looks like we had 132,000 tons of soybeans that were sold to China. We also had 105,000 tons of soy meal that was sold to Thailand in 2017 and 2018. So that's all new information. They just came on the wire here just a moment ago coming in the studio that the Houston ship channel is already shut down as Hurricane Harvey nears. So that could already be having an impact. I understand about a fourth of U.S. wheat is shipped out of that region. So let's talk with Rich Nelson of Allendale Incorporated about all this stuff going on. Man, there's a lot to digest here in the ag trade today, Rich.
Certainly is. And actually on this last subject you're talking about, this hurricane, we generally don't think of this as being a grain-related issue because it hits the state of Texas, but Texas is slated, according to USDA's August numbers, for 277 million bushels of corn production. So this might be something that we do watch maybe in a minor way here on the grain markets here today as well.
And of course, we have a free listing period going on right now on our our rural radio site on the farm radio. It is called Rural Radio Channel 147 on Sirius XM, and I did a show on there. It's called Commodity Wrap. We have that every morning, and my guest analyst on there and I were talking about the fact that by and large the cotton in the coastal area of Texas, they say, is mainly harvested now, thank goodness. But they said if you go into the central part of Texas, the bolls are just now opening. And with the possible inland impact of Hurricane Harvey, as they have torrential rains that move so far inland, he said that is the worst possible thing that could happen for all the bolls opening, because that tends to make that lint yellow and it really cheapens up the quality of it.
That's actually a great point here, and certainly very important for us to watch regarding what is still our largest state as far as cotton production. In this case, you're looking at over 8.8 million bales lined up here, far in excess of even the next person, Georgia, 2.9. So this is something I think you made a great discussion point there that we do have to follow here today.
And the cotton market has been firming up in recent days, that's for sure. Yesterday on the crop tour, it looks like Minnesota corn was pegged at 191.1 bushels per acre versus last year's tour estimate of 182.3. So that was on the high side there. On the other hand, Minnesota soybean pod counts, they say, were estimated at 1,020 basically, if you round it off, compared to 1,107 from the tour last year. The three-year average is 1,086, so lower than both of those. Now, if you look at Iowa, they pegged corn at 179.7 bushels per acre. Last year, the estimate was 188. And here again, on the soybean counts, the pod counts were way under what we had last year. So I guess, is the trade looking at that as a positive here today or not? Because the overnight trade seemed to be a little softer.
I do have to think this will be something which the trade does watch. On the soybean side, you made a great point about the pod counts. Only Ohio was seen with higher numbers than last year as far as pod counts. All other states were seeing anywhere from, I'm looking at the list right, I've got anywhere from a 1% lower than last year pod count to as much as a 10 to 11% lower pod count for the state of Iowa, for instance. So this will be something I think the trade does pay attention to, and we'll see what type of price reaction we get after that here.
Okay, Rich, I'll bring you back here, and we'll talk more about the markets. We're talking with Rich Nelson. He's with Allendale Incorporated. He's based in McHenry, Illinois. We'll pause for a break. We'll be back talking livestock next. And we're back with you here to take a look at the livestock industry. We're talking right now with Rich Nelson. He is with Allendale Incorporated, and he's based in McHenry, Illinois. And the big item today, if you look at it from the livestock perspective here, Rich, is the monthly cattle and feed report that's going to be coming out after the markets close up for the day. Now, this doesn't get released until 2 p.m. Central Time. But with everything else going on, I'm afraid this may kind of get lost in the shadows, if you will, by next week. Early estimates looks like they're looking for a little bit higher numbers than what we had last year in all the categories. On feed expected to be 104.7%, placements 105.9, marketing's at 104.6. So does that pretty much jive with the numbers that you had?
You know, for the most part, we are actually on the lower end of the group. Of the 10 to 11 analyst surveys, there's about a group of 4, which includes us, who are calling for a 1 or 2% year-over-year gain in placements, which would be a good drop from the past 8 months of 11% higher placements. And there's the other group here suggesting in the middle 6 to 10% higher, and you have maybe one outlier guy with a very large placement number. So we're actually on the lower end of the whole placement discussion for the whole group here.
Now, why is that?
And our key thing we saw is during the month of July, the actual sale barn data, the amount of calves and feeders sold through the sale barns as shown by USDA, that was actually up only marginally over last year. And that would imply that perhaps cattle feeders are getting maybe a little discouraged by this drop in prices, which had happened off that May high down to July, and also maybe discouraged by the fact that break-evens for their cattle coming out these next few months, those actually will start rising at the exact same time as cash cattle prices are going to fall here in the fall.
Wanted to review our latest wholesale beef and pork numbers for everyone, because the beef market has really been struggling here lately, and that has really put some weight on the futures trade as well. Choice cuts yesterday afternoon, according to USDA, were down 58 cents again, with the average price of $191.75 per hundredweight, and then you had the cheaper valued select cuts at $188.66. That would have been down 81 cents. They were both down, but some analysts point to the fact that that spread continues to just widen out ever so slightly, a little more each day here this week.
Certainly does, and our main issue with this whole discussion point of lower falling prices and obviously a changing choice select spread is the number of cattle being available right now. The seasonal rise in slaughter has picked up a little bit. In fact, we estimate this week's kill at 646,000 head. Over last week, 634. So numbers are building, and important for us to consider, this is the largest weekly kill we're going to see since July of 2013. So numbers are building, and certainly markets respecting that concern here.
We also have the pork carcass cutout values that came out yesterday afternoon from USDA, and here they were down at 87.18 per hundredweight. That was down 75 cents from the day before. Loins and hams were a little higher yesterday. In fact, the ham market was over $1 higher, but the bellies at it again, down almost $6.50 at $145.60 per hundredweight. Rich, thanks so much for joining us. Lots of useful information. I appreciate that so much, and I hope you have a great weekend if I don't talk to you before then, all right?
Right back at you. Thank you so much.
All right, good job. Thank you, Rich. Rich Nelson of Allendale in McHenry, Illinois. Man, are we going to be busy today.
It's going to be a hectic Friday. Thank you very much, Marlon.